Hey, this is Danielle. Welcome to the free video. So, tonight I'm going to be talking about Google, which reported earnings after the close. I elected not to trade this one. Most of the reason is because I've been doing a lot of iron condors, also known as iron flies, on earnings, and this one just struck me as a moment in time where you could really see some explosive moves to the upside. Obviously, you never know if it's going to come in for sure, especially because expectations were so high. However, what we're seeing after the close is that Google is having an absolutely explosive move on earnings. Now, this is why with some of these tickers that I think, hey, there is a possibility that this thing could really explode, and I could put a butterfly up here at 2,800. But I think I would just rather wait until tomorrow and see what happens and then trade it then. And this is kind of what's coming through right now. So I think that this is going to set up for an opportunity tomorrow. So I wanted to walk through it. Well, let's talk about why. So, first of all, a ticker, like the market makers are pretty good about pricing in an expected move on earnings. They say pretty good because they overshoot or they undershoot. And when they overshoot or undershoot, that's when you have opportunity. So, looking at Google in particular, you had a market maker move of $91. I did not think that was going to be high enough because of the previous moves that Google's had 101, 146, 110, 112. Especially in recent history, these are a little bit, obviously deeper in history. So anyways, that's why I didn't really believe that move overall. But what we're seeing is after hours, you're trading all the way up at 27.22. So you've had almost a $100 move. So you've had almost a $137 move actually, from market close to the highs. That's pulled back to be a little bit under $100. You're looking at around $80. Okay, so at this point in time, you did have that explosive move. It's come down a little bit. Right now, it's within the expected move. But the question is where it's going to open tomorrow. So if it opens up, more than $100 from where it closed, which would make it 27.38 or above, that is when you really have the possibility to trade a continuation move. Now, when you're looking at the hot zone goes back and it calculates, okay, what did these tickers do on earnings, and then what do they do post earnings? Google on 7 out of the last 8 quarters, not this quarter right here, has traded higher in the 8-day time frame, and that is true even when they haven't beat earnings, or even when they haven't traded higher after earnings. Okay, so I think you've got a pretty decent high probability shot here. So it's a couple different factors. Number one, yes, for a little while we did go over the market maker move. We'll see where it opens up tomorrow. You typically want it to be about 1.5 times the market maker move. Then also, you want there to just basically be continuation. So what that would look like is, all right, let's say that we held around this price point, and then tomorrow, you gap up, you have something like this, and you have a nice little stair step fashion. There's a couple different things you could do with this. Well, number one, you could target the $2,800 price point. I mean, after these numbers are all going to reset tomorrow when the market opens again. So this is not going to be accurate right now, I don't think, based on the moves and everything else. But if you could guess, okay, we're at about 27.30. Again, you'd have to look at it tomorrow. And then is it reasonable to travel up into the key psychological value at 2,800? Well, yeah, it's super reasonable. It's probably going to be around $70 expected move. Maybe I'd guess tomorrow. So doing a butterfly up at that level, doing something like 2750, 2800, 2850 could make sense. Butterflies are great. They're really low risk, high reward. But at the same time, if you wanted to do something that was a little bit less complex and you didn't have to pick your target, you just felt like, okay, Google's probably still going to go higher, in that instance, selling some at the money puts is going to make a little bit more sense. Now, again, it's going to depend where it's trading tomorrow because I'd want to do it at the money, so I can't really show you a great example here. Also, there's probably going to be a lot more volume in these options tomorrow after the move. So basically what I would do is I would just look at, okay, so how can I set up a put credit spread that's going to give me a low risk, high reward situation where, all right, I think this thing is going to keep trading higher at least for the next 2 or 3 days, or even go out one more week and give it even some more time. Now, right now, these spreads are super wide, they're super thin, but check them out tomorrow because I can almost guarantee you they're going to be better, and this thing is very likely to have a post-earnings run. So, right now, we're really in the midst of FANG earnings week. This is, very volatile time. Definitely hold on to your hats. Be a little bit careful because things can get a little bit crazy. Typically after FANG earnings comes the FANG over. I'm going to be discussing that in my webinar tomorrow. I'm going to be talking about some hot stocks to look at, stocks that I have in my portfolio right now, and why I use seasonality to pick up and add stocks to my portfolio. I'm going to talk about IPOs, small cap, mid cap, large cap stocks, all the above, and I threw in some Bitcoin and ETFs. So if you want to check that out, you can go to simplertrading.com/wealth, and I will see you tomorrow at 7 o'clock.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.